Microphone on, airplane mode on. Forgive me for the noise in the background. Let's go. The best investing strategy. So as a beginner, it's important that you take baby steps first. I understand that you've seen these big returns and you want these big returns, but what you have to understand is, as a beginner, you're not going to get these big returns. And the reason why is because you have something called fear. Most beginners' biggest fear is losing money. It's easy to get discouraged, and oftentimes you'll be eager to hurry up and get on that level of the elite investors. And on my first day of investing, I lost £150. So I'm here to try and help you not lose money. But what I cannot promise you is that you will not lose money. Patience is key. Number one, patience is number one in this game. The quicker you rush the process, the quicker the process will rush over you. And what I mean by that is that it takes 9 months to make a baby. If you rush a baby, it doesn't come out properly. If you rush a meal, a turkey, it's not going to be smoked properly. Do you understand what I'm saying? Things take time to become good. If you don't want good things, then you can get them quickly. Fine by me. But if you want long-term wealth, if you want to learn about them, you need to learn. You need to learn. Get familiar with the stock market. Get familiar with the crypto market. I always say this. Google is my best friend. YouTube is my university. You need to learn. Identify what kind of learner you are. Are you a visual learner? Are you a hands-on learner? Are you an auditory learner? Me personally, I believe I'm a visual learner. I like reading articles. I like reading books. Maybe you're a visual learner. Auditory. You might like listening to podcasts, like listening to videos. Maybe you want to get more hands-on and get stuck in and open a trading practice app. Maybe you like talking with more experienced investors. You can hit me up. blackbezos.com, set up a call. The biggest mistake all beginners make is buying stocks only because we like the company, or buying a random stock because it's cheap. What I see time and time again is people just buying stocks just because they've heard about it. But then when I ask you, why did you buy this? You can't give me an answer. You bought GameStop just because you heard somebody tell you it'd make money. You bought Dogecoin just because you heard somebody tell you it'd make money. It's not enough. Do you know what I mean? It's not enough. The question you should be asking yourself is this crypto, is this stock still going to be here in the next 5 to 10 years? If you can answer that question, you understand the company or crypto or whatever it is you're investing in. McDonald's, Apple, Nike, we know these companies are going to be around for 10, 15, 20 years. We know Bitcoin is going to be around for 10, 15, 20 years. So why? Because we understand them. Well, forget Bitcoin because you probably don't even understand what Bitcoin is. But McDonald's, Nike, Apple, Google, Microsoft, you understand that they're still going to be here for 10, 15, 20, 30, 50 years. So you understand them, so why not invest in them? Some of the stocks that I recommend for a beginner would be Tesla. While you're learning, some of the stocks I can just wholeheartedly say just go for are Tesla, Amazon, Square, PayPal, Facebook. If you were listening my last video, I said these are, blue chip stocks, blue chip companies, market leaders, Disney, Apple, Nike, Match.com. These are market leaders. I always say this, buy the dip. Buy these companies on the dip. Even if they're $2 down, $7 down, buy the dip. These are cheap companies. As I said before, we know these companies are still going to be around for the next 5, 10, 15 years, 20 years. And guess what? They're still going to be going up in the next 5, 10, 15, 20 years. So right now, whatever price they are right now, they're cheap. Because they're just going to be worth more. Buy them on the dip. And let me tell you my thought process on buying these stocks and what I mean by the dip. Obviously, you're looking to buy them here. But you can never predict these prices. Something you can do is, if you scroll down, you can go to all ratios and it will start showing you the ranges. It will start showing you price and volume. And what the range tells you is the lowest price that it was over the 52-week period and the highest price that it was. Since over the 52-week period, it involved the market crash, the coronavirus market crash. The lowest price that it was $53. That's the lowest price that it was in March 22nd when lockdown was announced. The highest price that it's been was 1st of September when I took the screenshot in November. That was $137, and now it's back down to $126. Now, what you can look at is the 1 day price change and 5 day price change and month to day price change. And what these tell you is, over a 1 day price change, yesterday the stock price was 1.59% higher, and now today it's gone down by 1.59%. However, over a 5 day period, the stock has gone up and back. So the month price change basically means that the prices went up 6.39% over a month period. So can you see how you would have liked to have bought a month ago when it was down by 6.39%? 13, I think you get the rest of the picture. So now you might be thinking, oh, so do I buy the dip on the 1 point? No, you don't buy on the 1 day, because the 1 day, it's very volatile and it shows high fluctuations. Anything can happen over a 1 day period. Do you know what I mean? Anything can happen in 1 day. But over a 5 day period, over a month day period, that's when we can say, oh, is this high, is this low? Now, just because it's in positive doesn't mean that it's not a dip. You understand? If the month day price change was only 1%, and you know this is a company like Apple, you can look at that and go, no, this is going to do numbers. This is going to do numbers. Do you understand what I'm saying? So my basic rule of thumb is, if the month day price change if the month day price change anywhere below 3%, it's a buy. 5 day price change below 1%, that's a buy. Do you get me? 1 day price change minus 5%, it's a buy. Do you understand what I'm saying? Yeah. So yeah, that's really it for beginners, and I'm going to just do intermediate after. So that's it there. Next video is going to be the intermediate stage. So yeah, that's it. That's a wrap. Oh, the cringy YouTube shit. Like, subscribe, and if not, I couldn't give a